Hey everyone, and welcome back to another video for today. So as you can see, over the past week, it has been absolute bloodbath. Yes, there will be blood. It's also a pretty good movie. But the cash investing portfolio was down 7.3%. Yes, 7.3%. Whereas the S&P 500 was down 1.81%. Pretty bad week overall, but on Friday we did close a bit better, I would say. Year to date, still up here 60.87%, whereas the S&P 500 is up 14.48%. And since the start, still up here right now 156.84%, whereas the S&P is up 35%. And so in today's video, we're going to have a look at the probability of another rate cut in December. We do have apparently some big news here. Deal to end government shutdown is in reach according to Axios. And then, of course, we have a very interesting upcoming earnings week. We have some interesting market data as well. And of course, I'll touch on the portfolio and the upcoming moves that I might be making. So let's start off with the upcoming earnings week, shall we? On Monday, we have, for me, a big deal, early Monday, Pagaya. Pagaya's earnings is on Monday. As you know, I do have call options for January, $30 and $40. Yes, they are deep in the red. We're going to talk about the options game plan in a bit. Then after hours, before the market opens, we also have Monday. Yes, they do report always on Mondays. Then after the market closes, we have Rigetti, quantum computing. Then CoreWeave. CoreWeave does report the day before Nebius reports. So that's interesting. Big Bear AI, Rocket Lab, AST Space Mobile, TerraWolf, all of that after the market closes on Monday. Tuesday before the open, we'll do a live stream, of course. Nebius earnings report, C Limited. Then after the close, you have Beyond Meat, Oklo, and I think that's about it. Maybe I'm forgetting one, but that's about it here. On Wednesday, we have Circle before the open. On Holdings as well, Global Foundries. Then after the close, Cisco and dLocal. Of course, to me, dLocal is the most important one on that day. And then Thursday before the open, you have Walt Disney, Bitfarm, JD, PaySafe. And then after the close, you do have Red Cat, Applied Materials, and New Holdings, among others. But I do think that those three names are maybe the most popular around here. Now let's have a look at some data, as always, from Subutrade on X. A great follow that does provide this for free on his X account. So the S&P 500, after it's up more than 34% in the past 7 months, this is what has happened in the past. As you can see, a week later, 2 weeks later, 3 weeks later, the amount of time that we were positive fluctuates between 42% to 58%, but on average, we are down. Okay, on average, we were down. After that, a month later, 2 months, 3 months, 6 months, a year later, well, we are more than 50% of the time positive, but on average, we're up. Okay, on average, we're up 0.13%, but then we do go up 1.6, 2.3, 3.3, 10.6%. Looking at the Nasdaq 100 after it's up 47% over the past 7 months, here it's not that great. So a week later, only 14% of the time were we green, but on average you were down 2.79%. 2 weeks later, 0% of the time we were green. On average you're down almost 3%. And then 3 weeks later, 14% of the time green, but on average you're down 4.5%. Then it does get a little bit better, but you have to go all the way to 6 months to a year later to be, well, the majority of the time green and be up double digits. Now, since we are apparently nearing the end of the government shutdown, again, we're going to talk about that in a bit. This is what had happened before the S&P 500 after the government shutdown ends and the Nasdaq 100. As for the S&P, you can see that a week later, only 50% of the time were we green or red, but on average you were still down 0.32%. But afterwards, well, the odds are definitely here in our favor. As for the Nasdaq 100, a bit of the same, I would say. A bit of the same, but here as well, just focus on maybe what happens 3, 6 months, 9 months, a year later. We are the majority of the time green and we're up significantly. Lastly here, what happened to the S&P 500 after less than 55% of the stocks are above their 200-day moving average, while the S&P is within negative 1% of all-time highs. Here, as you can see, a week later, only 47% of the time were green, but on average, we're basically flat. 2 weeks later, it's about the same, but on average, you're up a tiny bit. And then it does improve from there. Although a month later, you can see that for also 47% of the time, we are green and we're only up 0.36%. But the longer out you're looking at these things, the better it is. Now going over the options positions, and of course, iron, CoreWeave, and BMNR. Iron still the same. As for BMNR, also still the same. CoreWeave did not touch that as well. I do want to say, and I've said this during the live stream, that BMNR is one of those positions that I will probably close if some of the other names that I own are at attractive levels. Because, of course, I would like to invest way more in companies that I believe a lot more in than in maybe very speculative place that is BMNR, which is why I've never really increased my position, and I've said it time and time again. There is, of course, a path towards success with it, but then again, do I need it? Right? I go to the same story time and time again, the Peter Lynch explanation. You can start off with multiple stories that you like, and along the way, some other stories make more sense. You might like some other stories, and then you start to cut the stories that you don't like anymore or you love less. Maybe that's something, right? And BMNR, yes, okay, tokenization of the financial system, etc., etc. Okay, it makes sense. Makes sense. There's a long, long road ahead. But can I use this money to buy maybe more CoreWeave, to buy maybe more Rocket Lab, to buy maybe more Shift4, something like that? Maybe. So I'll keep you, of course, updated on that front. But I did sell out of another position, which we'll talk about in a bit. Now, as for the options play, of course, you can see right now that the 2027 ones, 2 of them are red, although it's only for January 2027. Quite strange, right? Yeah, I found it strange as well. But okay, I am still confident that this will work out. Of course, as I said in the live stream, with options, now that I have a feeling of, owning call options, it is, of course, completely different than owning shares. Because with owning shares, you're not playing with time unless you're a trader and you're really trying to time the market. But with options, yes, time can be your friend or your enemy. That's the very, very big difference here. That you're buying, let's say we're talking here about PayPal. I can be right on the thesis, but I can be wrong on the time. Because this can work out a couple of days after my options expire. I'll be screwed, of course. That's the thing here. When you hold shares, you don't really have all of that, stress, I would say, which again makes me understand people that only do options more and more. Because then I understand their emotions are running quite high. I understand why they need the stock to move up quite quickly. I understand that. But me specifically talking here about those PayPal call options 2027 January, I'm not stressed as of yet. Ask me that question maybe a year from now. As for the Pagaya one, 2 of them, of course, for January, $30 and $40 strike price. Both of them are down significantly. Now, as I said, Pagaya is reporting Monday morning. There still is 2 months' time, right? There still is 2 months' time until they expire. Of course, it would be great. It would be great if we were at $30 going into the earnings report. I'm still quite confident that they will beat their own guidance or what the market is expecting, because what we've seen is, again, other companies in the same industry show some weakness, right? Although with SoFi, with the lending part, SoFi has been performing quite well. But Pagaya has been taking a hit because of Upstart. I do still think that Pagaya is a better name and a better run business. But of course, we'll find out pretty soon if that is correct. Previously, the stock did react very, very positively after the earnings. I mean, it was up, I think, over 20% on the day. That would be great, and that would, of course, make these losses look less bad than what they are right now. But I still need that stock to move up more before January. Again, the time aspect of options, for those who don't know, is very important. It might very well be that maybe in December, I see sentiment with the market is not that great. I'll cut my losses. I might even roll this one over for maybe leaps or whatnot. Could very well be. Yes, I'll take a loss, but might work out, but with a different time period. As for the PayPal ones, don't focus on the first one right here, but because that's not important. The other ones here, the March and the June ones, more important. The March one, again, I do still think that I have enough time for this to be playing out. But here as well, if I see that in January, for example, we're still really far away from $90 or $100, then yes, then maybe I might roll those over. I might buy more June ones, or I might buy more January 2027. I still give them enough time, or give the stock enough time to move. Plus, we also have Q4 earnings and 2026 guidance to really move that stock. The upcoming earnings report is probably going to be at the end of January or the very, very start of February. So even then, still have time. With the June one, you of course give them 2 extra quarters. So the game plan is quite clear. Know what you own, know the risk, know that you can very well take some losses here, but do focus a lot more on the time aspect. It might very well be that 2 months from now, the majority of my PayPal options will only be 2027 call options. Possible. For some, it's too far down the line. For me, that's okay, because if it works out, it's a big payday. Now, what could help with that is this, the end of the government shutdown. So this is basically what we got right now, literally an hour or two before I'm filming this. A handful of Senate Democrats on Sunday indicated they are ready to advance a package of bills that could end the government shutdown. Why does it matter? It is the most significant movement towards a bipartisan breakthrough in the talks to reopen the government in over a month. At least 10 Senate Democrats are expected to support a procedural motion to advance a package of spending bills and a short-term funding measure through the end of January. The deal would include a December vote on a Democratic proposal to extend ACA tax credit for 1 year, multiple sources has said. It would take 60 votes to pass. Again, with this, yes, I've heard multiple things and I've seen multiple posts by President Trump as well with regards to the healthcare thing. Is it bearish? Is it bullish? Oscar, right now I will refrain from saying anything because the news is changing every single hour. So it doesn't really matter what I'm saying right now. Let's wait a couple of days and then we'll see. Yes, enhanced subsidies are not included in the guidance. But if something else changes, then it might yet still short-term impact Oscar negatively. But again, we'll see. I'll update you when something concrete actually happens here. Now, if we go and look at one of the betting markets here, Kalshi, we can see that the current shutdown is at 39 days. And right now it seems like the betting people are saying that it's going to last 43.7 days. Well, as you can see right here, a couple of hours ago, that was at 48 days. So we're now down by almost 5 days. Will it happen? Will it not happen? Remains to be seen, but I think market sentiment is what matters. If we do see some positive news coming out and we do see that the government shutdown is going to end, markets will probably start to recover. And then if we look at the probability of a rate cut in December, that currently sits at 66.5%. A week ago, that was 63%. A month ago, that was 81%. And I do believe that 2 days ago, it was closer to 70%. So right now, still seems like we're going to get another 25 basis points cut in December. Moving on to the portfolio. So over the past week, as you can see, not much has changed when we look at the ranking other than the cash pile. The cash pile did increase. Why is that? Because you're seeing that now we have 19 positions, so one has been cut. Who has been cut? Well, it is United Health. Now, calm down. Don't write anything in the comment section before you actually listen to what I have to say. I'm saying this right here when I sold it. The reason why I'm selling is not because I'm bearish, but because I like other stories better at current prices. I still believe United Health will recover, but since a lot of other names I own have taken a beating recently, I'm raising cash by selling this one. This is something I've learned from Peter Lynch. You can like 10 names, but along the way, the stories, prices change, and that's when you start cutting and allocating more to higher conviction names. Again, I'm not bearish. I'm just more bullish on other names I own at current prices, and that's how I'll finance those moves. Make sense? Well, it makes sense to me. I did also do 2 extra things. One, the last edition of the year, I'll allocate accordingly after most of the companies I own report, which is probably going to be by the end of the week. I don't know how much lower we can go or will go, but I see a lot of names at attractive prices. Now, in great timely fashion, I did manage to buy more Shift4 at almost the highest price it was the day after it reported their quarterly figures. I added here 16.6% to that position. I did a video about that. Earnings were good, stock is cheap, short interest is very high, it is undervalued. Yes, right now it is much lower, right? It's still at $66 because we had that huge reversal. I bought it at 75. The position is still down 15.8%. Okay, now I have cash. I have cash to deploy a week from now. What will I do? Well, it depends on, of course, Nebius, Rocket Lab, D-Local, and, well, CoreWeave in the other portfolio. But Rocket Lab, Nebius, D-Local are all reporting over the next coming days. I'm not here to predict what will happen with the stock price, but I do think that Nebius will have a good quarter. It would not surprise me if the guidance, the ARR annual guidance, is going to go up. What will the stock price do? I don't know. If it's a great earnings report and we go back down, great, I'll probably buy more. Rocket Lab, if it's a good report, good commentary, but Neutron is delayed by a little bit, stock will maybe crash, but if it's good enough for me, I'll add more. D-Local, I would not have any issues buying before the earnings, but since earnings are happening over the next couple of days, okay, I already have a position, let's wait and see. As for the rest here, they'll have to wait until these 3 names will report, but yes, I'm seeing a lot of names that I like, still like Rubrik, still like Shift4 quite a lot, and yes, even SoFi, right? SoFi was back at what? $26 or so on Friday. I did add more Meta in the retirement portfolio, could have added here as well, but then again, cash pile increasing was a bit more important, but yes, Meta didn't have any issues despite it being quite a big position overall for me. So there are opportunities. I'm just waiting for these 3 companies to report, and then I'll deploy the cash accordingly. And by the way, on Friday, there are a couple of names that did rebound on their moving averages. Oscar, the 200-day moving average. If we look at Rocket Lab, we have here the 100-day moving average rebound. SoFi, I'm not sure yet, but also 50-day moving average went under, closed above that. Let's see if we can find maybe Nebius as well here. 50-day moving average went under it. We closed above it. If we look at the local, same story here, but with the 100-day moving average. A bit random, but Zeta as well. As you can see, huge difference here. At one point, it went to $17.70 under the 100-day moving average, under the 50, and it closed above it. So who knows, maybe Friday was the reversal. And so all in all, that's about it. Again, trust me, I know, last week, horrendous. But this is what happens when we own high beta names, right? You cannot have names that go up triple digits and then not have them go down significantly when there is a short-term, let's say, market downturn. No, it's just the price that we're willing to pay, right? If you're looking for those multi-baggers, if you're looking for those stocks that will outperform quite comfortably, then you should be comfortable seeing these types of weeks. And I'm not saying this is great, right? Being down 7.3%, but you're down 7.3% because you do own names that are up triple digits already, probably year to date. Keep that in mind. Keep in mind that buying great companies at great prices is always better than buying high, selling low, panicking, not knowing what you own. So all in all, that's about it for me in this video. Hope you enjoyed. If you did, leave a like, subscribe. See you all in the next one. Bye-bye.